Welcome to the Capital Spreads weekly look ahead. Today is Tuesday the 18th of September 2012. The week has got off to a negative start. Yesterday we saw the FTSE fall about 20 points, and again today we're lower by some 40 points or so. The German DAX has been down up to 100 points already this morning, just bounced off the lows. But currently the FTSE's at 5750, the Dow at 13,510. For the euro, that's also come off its highs. Euro dollar at 130.90, cable at 162.40, gold at 17.58, and Brent crude. Crude markets, any clients who were trading that yesterday would have seen a severe bout of volatility. Big moves in crude prices yesterday, but Brent's at 113.55. So this week really has sort of got off to a negative start, as mentioned, and that's following weeks of real strength for equity markets, in particular at the end of last week. Of course, the Dow hitting highs that it hasn't seen since December in 2007. That was following moves from both the ECB and in particular the FOMC, where they gave the bulls a really good excuse to buy into stocks, saying pretty much they'll do unlimited asset purchases as part of their QE3 program in order to prevent the world's biggest economy from going into another recession. So that really did fuel risk appetite at the end of last week, but just this week things falling back a little bit, and that's primarily due to some slightly bearish numbers from China. Also, we've seen Spanish bond yields on the 10-year government bond just poke their heads back above 6%. So both yesterday and this morning we're seeing markets a little bit lower. Today we saw some inflationary numbers from the UK. They came in line with expectations. Year-on-year inflation at 2.5%, just being slightly propped up by higher oil prices, which we have seen inflation, of course, in the UK come back quite dramatically, but still above its government target. The Bank of England's target, of course, is 2%. We saw slightly better than expected German ZEW sentiment, and that's really probably what has lifted markets just off their lows this morning. So for the rest of the week, we've got tomorrow Bank of England minutes, and that will be interesting to see how they voted. Of course, there was no action from the Bank of England, whereas the Bank of England's European and American counterparts went on a sort of QE bonanza. We also get US home sales. And really it is quite quiet for the rest of the week on the economic data front. Markets now going to be left to their own accord. So we'll see how they can continue going forward without the assistance of central banks. But Thursday sees retail sales from the UK, consumer confidence from the Eurozone, and then there's a bit of US data in the form of weekly jobless claims. There's also leading indicators and the Philly Fed. And then to finish off with on Friday, the UK public sector net borrowing. So really quite a quiet week ahead, also pretty quiet on the corporate data front. And as we know, the week has started quite negatively, so we'll see whether that will continue into the remainder of the week with this lack of economic data, or whether this little pullback has presented a buying opportunity. That's it. As ever, do give us feedback, media@capitalspreads.com.